Hey, welcome back. It's Jason Walter here. In today's video, we're going to talk about Redfin's latest housing market update that was just posted today. They posted that we have all-time record highs for home prices, yet things may change based on some new data that has become available. This was just posted on July 11th. It says here the median U.S. home sale price increased by 5% year over year, but there are signs that price growth could slow soon. Keep in mind, they're not saying that home prices are going to decrease. They're saying here that the growth rate is going to decrease. In other words, a deceleration, my least favorite word over the past couple of years. Anyways, they're talking about how home price growth could slow down, with the average home selling under list price on average and inventory rising and a high share of listings growing stale. In other words, houses taking longer to sell compared to 1 year ago. The median U.S. home sale price increased to a new all-time record high at $397,482 for the 4 weeks ended July 7th, up 4.7% year over year, the biggest increase in over 4 months. By the way, I'll touch on how each of the metros fare because there's some very big differences as well. Especially compared to the previous week as well. Home prices have remained stubbornly high despite elevated mortgage rates pushing down home buying demand. I would never guess that based on rates being at around 7% for months, I would never guess we have all-time record highs for home prices. That completely caught me off guard. We're seeing a lot of sales at upper range of the market, which is impacting the growth rate in home sales. But overall, we're seeing all-time record highs in home prices according to NAR, or National Association of Realtors, the California Association of Realtors, Redfin, as well as CoreLogic as well. So speaking of a decrease in home buying demand, they say here that pending home sales are down 3.5% year over year, and mortgage purchase applications, according to the MBA, are down 13% year over year. That's partly because inventory remains historically low. They're talking about the increase in prices. It's partially due to the fact we have record or historically low inventory levels. Also, this is pushing up prices and pushing down sales though. It's also partly because final sales prices are a lagging indicator. I talk about this all the time, right? Leading indications is so much different compared to lagging indicators. Anything that has to do with a closed home sale, such as the median sold price, the sale price to final list price ratio, days in the market, etc., are all lag indicators based between home buyers and sellers getting the offers accepted about 1 or 2 months ago. There are also signs that price growth may lose momentum, like I mentioned at the very beginning of this video. The typical house is selling for only 0.4 percentage points less than the final list price, but that marks the first time a typical house is selling less than, on average, the asking price. And here are the key words here: for the start of July since 2020. So what they're saying here is that for the same time frame, early July, this is the first time since 2020 in which home prices on average are selling less than the seller's final list price. Additionally, only 32% of houses are selling above the asking price, which of course means that 68% are selling at or below the seller's list price. But this 32% figure is actually down from 36% we saw 1 year ago. In addition to that, 32% is also the lowest share at this time of the year. Again, keywords here, at this time of year, since 2020. All right, let's talk about some leading indications of home buying demand because there's some very big differences here. So looking at daily rates as of today, I mentioned this in a separate video. As of Thursday, the average daily rate is at 6.85% due to the CPI, or the inflation report, that came in lower than expected. Also looking at weekly rates, according to Freddie Mac, the average weekly rate, again for people with great credit, 6.95%. That's up slightly from the 6.81% we saw 1 year ago. Meanwhile, applications to buy houses using loans increased 1% from 1 week ago, but still down 13% year over year. Also, Redfin's Home Buyer Demand Index, which is seasonally adjusted, this is a measure of requests for home tours and other home buying services they get. That was down a whopping 16% year over year, but only up 2% from 1 month ago. Also, take a look at this touring activity. These are real estate agents showing houses that are for sale to their home buyers, was flat compared to the start of this year. So for the week ended July 7th, it was flat compared to the first week of January. I would say this is not seasonally adjusted, so this would be impacted by the July 4th holiday, which we tend to see a decrease during the holidays. But it's pretty telling here that we saw basically the same number of real estate showings in July compared to January, which again, January tends to be a low point in our housing market. In any case, some last more regarding leading indications is Google searches for homes for sale. If you go onto Google Trends, you can search for any search term. It could be Jason Walter, it could be housing market, it could be homes for sale. This is a loose indicator regarding the interest for that search term, right? So for people searching for homes for sale, that increased by 17% from 1 month ago, but down 14% from the same time frame in 2023. So overall, big picture, we have elevated rates, but they did come down pretty substantially on Thursday, down by 14 basis points on Thursday, which is good news if you're actively looking to buy a house right now, or if you bought a house with an 8% rate, then of course you could refi at approximately, around less than 7%, let's just say. Depends on your financial picture. But overall, we have elevated rates. On top of that, we have record high home prices. And of course, this is keeping application numbers down by double digits. Redfin's demand index down by 16%. And of course, touring activity at low levels as well. And of course, Google searches down by 14%. All right, that's leading indications. Let's talk about some lagging indications of our housing market. So for the 4 weeks ended July 7th, which includes, of course, the July 4th holiday, we tend to see a decrease in activity. So just keep that in mind because these figures, I believe, are not seasonally adjusted. So talking about these 400 plus US metros, they look at weekly data going back to 2015, and their data is subject to revision. So overall for the US, the median sale price is just under $398,000, up by 4.7% year over year. Again, all-time record highs, and the biggest increase compared to 12 months ago in about 4 months. All right, let's have a look at Redfin's data center regarding the median sold price on a national level. Again, that increased by 5% year over year. Now, here's something kind of funny because the past several years have been quite volatile, to say the least. This year, up by 5%, all-time record highs. At this time last year, we were at $380,000, only up by 1%. Before that, we saw decreases in home sold prices from basically March all the way until we hit May last year. So this year, up by 5%. Last year, a small gain of about 1%. 2022, we saw a gain of 12%, but 2021, a giant increase of 21%. So prices are still increasing, but we're not seeing the crazy growth like we saw in 2021. Every market's different though, right? So let's have a look at how each of the 50 biggest cities fared because there's some very, very big differences here. So the biggest increases in home sold prices are West Palm Beach, Florida, a giant increase of nearly 14%. Actually, it was the first time in quite some time in which Anaheim, California was not in the top 3. After that was Fort Lauderdale, Florida, up by 13%, Detroit up by 13%, New Brunswick, New Jersey up by 12.8%, and Anaheim, California up by 12.2%. In contrast, there's only 2 metros that are down year over year, all located in Texas. Austin, Texas down 1.9%, and Dallas down by 1.2%. Let's also discuss the average monthly housing payment as well. These are housing payments of would-be home buyers using the average rate from Freddie Mac for a 30-year fix. Also, let's look at the median monthly mortgage payment as well. That increased to $2,742 per month at the 6.95% rate. That's the weekly rate according to Freddie Mac last week. That's an increase of 5.3% year over year and only $95 per month below the all-time record highs that was set during the 4 weeks ended April 28th. Let's have a look at a chart looking at average monthly housing payments going back to 2021. Right now, $2,742 per month, down from the record high that was set in late April. Back then, the average 30-year fix was over 7%. Now we're just below that at 6.95%. And obviously right now we have much higher home prices right now compared to April this year. In any case, at around $2,700 per month, back in 2021, the average payment was about $1,600 per month. So you're going to be paying approximately $1,100 more per month to buy an average price home today compared to the average price home back in 2021. I mean, can you say a lack of housing affordability? Sad but true. All right, let's talk about pending home sales, a measure of contracts being signed between buyers and sellers. New listings is when you list your home for sale. And active listings, the total number of houses actually for sale right now, or housing supply. So pending home sales decreased 3.5% year over year. And again, this is for the 4 weeks ended July 7th this year. Meanwhile, we have more new listings and active listings. So even though we saw an increase of 7.3% in the number of new listings, pending home sales still fell 3.5%. So again, an imbalance between supply and demand, new supply going up, whereas demand is going down, at least on a year-over-year basis. Also, active listings was at 970,000 houses for sale. That's an increase of 18.3%, but the smallest increase in over 2 months. I emphasize that because if you guys want to see home prices decrease greatly, we would need to see supply far outpace demand. Clearly here you can see that pendings are going down, new listings are increasing, but active listings saw the smallest increase in about 2 months. So active listings are not skyrocketing. In fact, last week they decreased, which is pretty astonishing. And so right now we're not seeing the data supporting we're going to see a housing crash anytime soon. And just let me share some slides for you guys right here. So let's look at new listings first. And keep in mind, this is impacted by the July 4th holiday week, which in my opinion is probably one of the reasons why we saw a decrease of new listings over the previous 4 weeks. But it's up by 7.3% year over year, quite a bit different or quite a bit less than the 10% gain we saw 1 week ago. New listings higher than last year, but much lower compared to 2022 and 21. Back then, there was around 117 to about 120,000 new listings. This year, only 93,000. In regards to pending sales, that's at least a 3-year low, but basically moving in line with last year's levels. This blue line is last year, in black is 2022, and 21 is the top there. So pending home sales, at least a 3-year low. Let's look at active listings though, because this is pretty unusual. So I believe this is really due to the fact we had the July 4th holiday. A lot of people decided not to list their home for sale during the holiday week, which is probably why we saw this dip here. Kind of what we saw in 2023 a little bit, but not 22. Anyways, it'll be interesting to see here that if inventory kind of goes like this, because inventory tends to peak in the late summer months and not in early July. So I would imagine we'll kind of go like this and then kind of go back up again and then go down in the last half of the year. But in any case, what we all can agree on is that inventory was increasing at a fast clip through basically May, but ever since then kind of has been increasing, but at a much lower rate. So I'd imagine we're going to see kind of inventory kind of go like this, unless there's some big differences here happening where if rates were to decrease greatly, causing demand to explode, of course, that would cause inventory to decrease further. But if we see new listings hitting the market more so than previous months, that would also cause inventory to increase, putting downward pressure on home prices. In any case, I'll keep you posted because a lot could change, right? In regards to the month supply is at 3.6 months, a small increase by 0.8 percentage points from 1 year ago. According to Redfin, a 4 to 5 month supply is considered balanced, with a lower number indicating a seller's market. I don't think we can, maybe this is true historically speaking, but I don't think we can apply this to each and every week, each and every month, because in my opinion, we should be focusing on the rate of change, not just saying that every single week the month supply would be balanced at 4.5 months. And here's exactly what I mean by this. Here's a look at the month supply over the past several years. So as you guys all know, 2022, we had a correction in home prices, but the month supply did not surpass approximately 4 months. So my question for Redfin, I would say that this would be should have an asterisk here saying that a balanced housing market, historically speaking, would be 4 to 5 months. But what happened in 2022, we had all-time record highs of inventory. So for example, March through May of 2022, the month supply was around 1.8 months. And because it doubled from May to November, that's one of the reasons why home prices decrease. Even though we did not get to this balanced supply in the range of 4 to 5 months. So I would say that because the month supply basically doubled from May through November, even though we didn't get above 4 months supply, the rate of increase is one of the reasons why we saw a correction in home prices that year. Also, have a look at this. Only 41% of pending home sales went under contract within the first 2 weeks of hitting the market. So a home gets listed for sale, only 41.1% of the time, the seller accepts an offer from home buyer within 2 weeks of the house being listed for sale. This is still a relatively high number, but a 3-year low at least for this time frame. So for example, in 2022, which is the red line right there, approximately 48% went under contract within the first 2 weeks. Now it's only 41.1%. Also, regarding how fast or how slow houses are selling, this is a big change over the past 2 months now, because houses on average are selling slower compared to 2023, which is all contributing to the rise of inventory. House gets listed for sale, takes longer to sell, more new listings hit the market, that all increases inventory levels. This is much different compared to January through basically April this year, when houses were selling faster, but ever since then, houses are taking longer to sell. And on top of that, at 32 days on average, that's at least a 3-year high right now. Now, here's something interesting, because last week I reported we had basically very, very close to a 3-year high for any month regarding the share of price drops. That actually changed this week because the share of price reductions actually decreased last week to 6.5%. Last week it was around 6.7%, basically on par with the peak back in November of 2022. However, though, during the same time frame, though, we're at least a 3-year high regarding the share of price drops right now. In 2021, this time, we were only at just over 2.5%. Now we're at 6.5%. In regards to the average sale price to final list price ratio, that was at 99.6%. This means on average, houses sold for 0.4 percentage points less than the final list price. And like I mentioned at the very beginning of this video here, for early July, this is the first time it's happened since 2020. But as you guys can see here, basically this line right here means that anything above this means houses on average are selling over the seller's asking price. Anything below this means houses are selling below the seller's asking price, which is normal during the winter months, January and February, for example, and also October through December. In contrast, though, looking at the same time frame right now for early July, this is the first time it's happened since 2020. So for comparison's sake, in 2021, this time, houses were selling 2% over asking. Now they're selling slightly below that at 99.6%. And lastly, let's have a look at Redfin's Home Buyer Demand Index. That fell 16% from 2023. It's also at least a 3-year low during the same time frame. What this means for Redfin and also Redfin agents as well is that their demand for their services is basically at a 3-year low for early July right now. Also, their index has been relatively flat for a couple of months now, which is very telling as well. With that said, please leave me a comment below with your thoughts regarding today's video. Also, if you guys want a real estate agent referral anywhere nationwide, please email me at jason@meetjasonwalter.com, or go to my website, which is linked below, or go to realestateteamfinder.com. Hope you guys have an awesome day and look forward to seeing you on the next video.